Hi, my name is Will Van Wig. I am a certified credit union financial counselor with CAFCU, Corporate America Family Credit Union. I'm also a senior marketing rep. I've been with CAFCU for just over 9 years now. And I have led, I don't even know, hundreds, it's got to be hundreds of workshops covering different financial wellness topics. We present these for our members, for our community members, and for the employees of our partner companies, and really anyone who's interested in just finding some direction towards financial wellness in their life. Today, I am joined by Christopher Prykop. Chris is joining us from the real estate department. He is a mortgage loan originator. Chris, if you want to say hi.
How's everybody doing today?
Everybody's doing great. I'm just going to answer for them. I just feel it. It's in the energy. It's in the crowd. So, with this session, it is being recorded. So if you need to leave early, yeah, see, I knew it. There's somebody doing fantastic in the chat. So uh, if you do need to leave this session early for whatever reason, it's meant to be a half hour. If we end up going a little bit longer and you need to dip, this is being recorded. It will be sent to everybody. All these recordings are available on our webinars website, kafka.org/webinars. So all of our previous sessions for the year are included in there. I'm going to reference some of them in the session today, just so you know where you can go for some of that additional context. There will be a survey following this. Please let us know your thoughts. If there's anything we can do to make these better, we absolutely take your input into consideration because we're wanting to present information that you're interested in. So please provide that feedback. It really does go a long way. And I love webinars. I love workshops like this. It's just a great format to learn of just taking a lot of information. But if you are someone who benefits from having just a direct conversation, we're gonna prep this early of there's these money compass sessions, and you see it right there on the slide deck, kafq.org/money compass. This is what I was just referencing with Becky Hilton from our partnership department. And these are free, unlimited financial coaching sessions that are available for our members, for our partner company employees, that you can set up 15 minutes as a phone call, video chat to ask questions, compare situations, just see what's going on. It's just your time to talk finances. So if you were wanting to just have a very direct conversation that's very personalized about your financial situation, great place to do it. Chris, do you think I'm missing anything? Do you think we're okay to get started with all of this?
I think we're okay to get started. You just covered a lot right there.
Yes, yes, I did. We've got a lot to cover. We've got so much
We do.
information for this half-hour session. Real fast, someone said, "Do I need to have an account login to watch the archive webinars?" Absolutely not. These are just available for everybody. Share them with your friends and family. Kafka.org/webinars. It will say on the title of the session, so it'll say "Beginning to Budget, Watch Recording," and so you should be able to directly access it. Um, Great place to go. If you run into any issues, you can always email us financialwellness@kafka.org. Let's get into this thing. Let's get started. So today we are talking about the steps to home ownership. And within this, and Chris is going to talk about this in greater detail, but this is just a method. These are some steps. Ultimately, it's going to be about finding what works for you, what habits really keep you moving forward toward your goals. Um, there's so much that goes into it for people's different financial backgrounds. What we've tried to lay out here is if you had time, if you had 1 to 3 years to really get yourself set up and to say, how do I get this so that when the time comes for me to buy a home, I'm in the best position possible, then we've got a method to do that. That said, you do not need to have everything completely done. If your life is moving at a speed and you find that you're at this position of needing to buy a home, then you can absolutely start that conversation. There's so many programs and grants and resources. So just some initial opening statements. We're going to be talking about a long-term plan, lots of ways to do this, but really once you're ready, start reaching out for that conversation. Chris, would you echo those sentiments?
I would 100% I agree with all those. If through the process as you're going through things, if stuff jumps out at you and you feel that, you don't have all the pieces together that we're going through here, but you have some of them, it's worth a conversation. It's always worth a phone call.
Yes. Chris, real fast, could you share some of your background? Because we're going to reference talking to you a lot during this. And so
Yeah.
I just want to say a little bit more about you, if you don't
Uh,
mind.
yeah, I've been with corporate America for 10 years now. Been in the mortgage industry. The 10 years I've been with corporate America. Before corporate America, I've been in the financial industry for 20 years, kind of worn every hat possible. So I've been a personal banker, business banker. I've worked with our licensing products and retirement accounts. So I've done a little bit of everything in the industry. I'm a great window and person of knowledge, whether it be on mortgages or anything you might need.
I would absolutely agree with what you said. I reach out to Chris all the time with different real estate questions because he has worked it from so many different angles. So he's just a great source of information. So, and Chris, always appreciated when I
Mhm.
reach out out of the blue with stuff. So let's get into these steps. Again, there's so many ways to accomplish this. This is just one way to really break down this initial planning for getting yourself prepared for buying a home. So, step one, it's just wanting to buy a home. Now, this may seem like a silly step to include, like it may seem too obvious, but within this, what we're really talking about here is motivation. People say we don't make uh, logical decisions, we make emotional decisions. And so that's where we talk about when we make our goals, we want to make our goals emotional, logical and emotional. They got to make sense, but we want them to be grounded in something that really drives us. And so, really, when we're looking at buying a home, it's not just hey, if this is a great investment, a great investment for what? For your future, for what? And like really build in this idea. This is this your new family home that you're going to pass down from generation to generation? Is this your summer home because you've worked so hard and now you're ready to like have something for every winter season if you're in Chicago and it's rough. Um, if it's just needing more space for the kids, knowing these things really helps when you're in those situations of needing to make decisions and really trying to identify what your priorities are. And so I know it may seem simple, but I don't want to discredit how powerful this can be. Also, when we're looking at this, with renting versus owning, I will say the vast majority of the time, it is probably going to be better to own than to rent. The money is going towards a long-term goal. Uh, that said, obviously, there's so many different situations out there of people living with different family members for different support for different reasons, or if you are traveling so frequently, or if you are moving so quickly year to year, then you might be looking at more short-term situations. That said, if you're here, you're probably interested in buying a home. We're talking about buying a home. It really, you can run those numbers on the difference between renting versus owning. There's so many calculators out there for that, but really owning is usually going to be that better financial impact as long as, you're supporting yourself through some healthy financial habits throughout this. Um, Not just looking at that initial cost, but just can you support a mortgage? Do you have that monthly situation going? And so within this, you're wanting to buy a home, you're looking at this motivation, you're starting to say, okay, well, what do I really need? What's going on? How do I get myself prepped? So step two is deciding to take action. I mentioned that we were going to go over some of these budgeting things from previous webinars. This came from our January webinar where I broke down a budget for a single person and how we can make adjustments, all these things. So now that you've said, I want to buy a home, it's time to start taking action where you start making that plan into or start taking that goal into an actionable plan. And so really it's just getting a baseline with this one. So we've got a whole section about how to budget. I included the resource for our spreadsheet template in the resources link within the Zoom widget. But really we're just trying to get a understanding of your financial picture because this is going to come up when you're having those conversations with Chris. They're going to want to know like, hey, how are things happening? Are you in a financially stable situation? And so having this information being prepared and armed with it is going to give you such a stronger position to talk about what your options may be. Um, Within this, I also talk about aggressively handling debts. We did defeating debt earlier in the year. We have that webinar available. Within debts, with home buying, there's just so much money that can go into it for that initial upfront cost. Taking care of your debts upfront so you can have that additional savings. So you're not paying more towards that interest over time. Absolutely beneficial. Um, you can save and pay down debt simultaneously. It's not one or the other. Very often, like even if you have debts, you should still be putting towards an emergency fund, unless you've built your emergency fund. It just varies. So we just want to mention this. You can do both at once, and as part of it deciding to take action, we want to start looking into what might be available to us. And so there's different employer benefit programs. Just in the same way that our partner companies offer us CAFCO as part of your benefit for financial wellness. And here comes this home buying webinar. This is exactly what we're talking about here, and ways to educate, and not just education, but also programs as well. And within looking at employer programs, within 401k, it's just a caution. Be aware of just all the fees and potential impacts of using your 401k as you're looking at what funds you have available for this. There are many programs that let you utilize your 401k, but you just want to be mindful of what the different fees are. Chris might be able to speak a little bit more to that because he's got more experience with assisting people, but that's where we want to talk about there for deciding to take action. So step 3 is defining what you want. So now that we have made this budget, we've cleaned things up, we know that we're in a position to start saving, and now it's figuring out, well, how much should we be saving? What could our future home look like? And so when we say define what you want, we're listing our needs versus our wants, like how many bedrooms, how many bathrooms, what does your situation call for? Knowing what you're willing to be flexible on, like water on the property, varies from people to people, or if you're looking for a wraparound porch, and if it doesn't have that, whatever that may be for you, just understanding where you're willing to compromise, understanding area-based costs, just depending on the location, and different taxes in the area. You can definitely check that out as you're trying to get a better financial understanding of what's available for you. And also, when you're looking at homes, I just want to bring this up for side hustle tax impacts, because there's so many people operating a side hustle nowadays that or working remotely, that there are tax benefits for those who manage self income uh, tax, and there are benefits to doing this in a specific way. Talk to a professional when it comes to making sure you're doing this right. But just as you're looking at your home, something to consider. And so once we go through all of this process, we say, okay, we know what we're actually looking at when we look at specifics for our future home. We're going to price this out against a real home example. Now, I'm going to use this example over 3 years, saying that this person's in a place where they are comfortable, rent isn't terrible, they're trying to get up this initial savings, whatever it may be. I'm going to talk about this over a 3-year period, um, with the idea that this home's probably not going to be there in 3 years. I say. This is just meant to provide some real numbers to base the situation off of so you can build up this plan. So much can change over the course of 3 years, and just another reason to continually check back with us for different updates on the industry in general when it comes to home buying and just the economic standpoint. But for different programs and grants that might be available, as different programs become available for that too. Anyway, pricing a real home example, using a real listing. When we do this, we're not only looking at this to calculate the monthly cost, saying, okay, if I was paying mortgage, are there going to be homeowners association fees? Are there going to be property taxes? What other things do I need to consider of what could go into this monthly payment? And also, we're using this to build our initial savings goal for the down payments, which Chris is going to talk about in just a second. Within this too, I wanted to point out, so this is, real listing. This is one website's calculator. This is another website's calculator. These numbers do vary in their monthly payment, and that's because of property taxes. And so whenever you're looking at these calculators, just understand, look at a few different websites to see these different listings, see if there's different numbers on different sites and what you might need to consider. Just so again, you're pricing this out against something real, that this becomes a real tangible plan for what it would look like to purchase a home. I am now going to turn this over to Chris for our first education break. It's all educational, but this is where we're taking a break from all the different setting or steps to do this, and just talking about what savings is, what these different savings terms that we have been mentioning are. So Chris,
So,
you.
yeah, so when we're taking a look at what we're really saving for, let's first talk about our down payment. Down payment is the money we're actually putting down on a house, no different than if we were talking about the down payment on a vehicle. So, in the big picture here, we're going to be taking on a loan to buy the house, but as a lender, we want to see a down payment done. Now, with the down payment, there are federal government regulations with the different programs on how much is required to put down on a house to receive the different kinds of mortgages. A minimum down payment structure for the FHA program would be 3.5%, compared to, let's say, the conventional program, which would be 5%. Now, that doesn't mean that that always has to all come out of pocket from you, the borrower, but it means those are the minimum requirements. And when I say it doesn't all have to come directly from you, the borrower, it means that there are government programs out there, there are lender programs out there, where you can help receive the funds, and there's even ways you can get credit from the seller to receive the funds for those type expenses. The same with closing costs. So looking into closing cost here, closing costs are the fees that are associated with buying the house. So things that you're going to have no matter what lender you go to, your appraisal costs, your titling fees, your related taxes. So the government taxes for the sale and the purchase transaction, the taxes through the county to record the transaction, and things like your initial escrow deposit. Now with these, I always tell people when you're shopping around for a mortgage, you're gonna pay what you get for sometimes. So when you're going to different lenders, you may be able to find a lender that has cheaper underwriting costs than other lenders, but you want to see how smoothly that those transactions are going for those lenders, because in any transaction, sometimes the cheaper things get, you lose quality or in the service you're receiving from those lenders. Earnest money. Earnest money is just a chunk of money you're putting down as soon as you sign the contract. So it's kind of your good faith that you're good for the home. It is typically non-refundable. So let's say I go and I sign a contract today, I'm going to put down between 1 and 3% of the sales price. And if I break that contract for no other reason than I decide not to go with that house, typically that money's non-refundable to me. Now, if I break that contract for other reasons, maybe there was something found in our inspection of the home, maybe the house didn't appraise out well, maybe there's something that wasn't disclosed at the time of the contract signing, I can typically back out of that purchase and get my money back. uh, with moving expenses. That's something that a lot of times we don't even talk about on from the from the loan officer standpoint, but it is something that you always want to plan for. When you're looking, depending on where you're moving from, whether you're moving out of an apartment you're renting and you have a full setup, so you have the full living room, dining room, your all your kitchen stuff already. It does cost iron movers to move that, or even just get a box truck to move it yourself. Or, if you're planning and you're moving out of your folks' parent house or grandparents' house, or maybe you're in a free living situation and you don't have that much set up, again, you still have to plan for how are we moving into the new place. A lot of times people don't understand too what reserve funds are. Reserve funds are for excuse me there. Reserve funds are funds that, depending on your credit situation and your debt situation, a lender may ask for up to 6 months of reserve funds. So we know that you can cover your principal, interest, taxes, and insurance payment if something would happen right away, or if something would happen throughout the process. This kind of goes back into the budgeting of 6 months reserves in life, where you just want to make sure that you're covered for those what ifs in life. And we all have those what ifs. So that's why we always want to make sure that we're not completely depleting all of our funds upfront just to purchase the house.
Uh, Chris, I'm going to move over to the next slide. I was just going to
Yeah.
add with the moving expenses, it's just one of those costs that you know is going to be there when it comes time. And so it's just being prepared for it is all, just so it's not a surprise, just so everything's accounted for to the best of your abilities. I have lived in 7 different states. I have moved many times within those states. I have moved so many times in my life. You're going to want to save for those movers. Trust me on that. Your back will thank you. It just gets, it's just so funny. Of course, every situation is different, but it's one of those, again, we just want to be mindful of it. Um,
I do want to address a couple questions that came through quickly, just because we're
yeah,
on the
yep,
topics.
we can do
If earnest money is put down on a house and your offer is not accepted, typically you're not going to put the earnest money or the check's not given until the offer is accepted. For some reason, if you would give it beforehand, though, your earnest money would be refunded if the offer wasn't accepted, or if the seller backs out of the transaction for some reason. So let's say maybe the seller's relocating for work and then their job drops their new relocation and they decide that their house is no longer for sale. Again, your earnest money is refunded. The only typical time it's not refunded is if you just walk away from the sale for no rhyme or reason.
Yes. And there's usually you're going to be able to find some sort of very legal above board way of saying, you know what, this isn't the right situation. You'll get that
Correct.
refund, but it
Uh,
varies. Yeah.
Two, I do see a lot of questions for people that are looking for a house sooner than what this plan is. Understand that this is just one scenario on how to save for a house.
Hmm.
It's not a one size fits all webinar. That's where, I'm going to talk a little bit later about as we're going through this call and have a conversation with myself, with one of my fellow officers. Everybody's life is different. Every situation is different. Some people need to move sooner. Some people need to move, have an outlook for when they're moving. Again, that's why we're here at Corporate America. We're here to help you build that plan to get you into a house, whether it's in 60 days or whether it's in 60 months.
Yeah, I think Chris and I both can speak to knowing how fast life can move at times. And, sometimes it just is the way it goes. And when I talk about financial wellness, I really view one of the definitions of just having being financially successful is just having options, just being able to say, this isn't my only thing I can do, that if I had my pick, these are the different directions we go. And so that's another big goal of this is just really getting you in this position to have options to be able to make that informed decision based off what's available to you. Um, so yeah, for those who are saying like any direct questions about getting this process started, I did include Chris's contact information in his speaker notes in the resources section within the Zoom widget again. So feel free to shoot him an email and he can help coordinate that conversation to get that started.
Yes, yes.
All right, let's keep moving
Yeah,
on.
keep moving on. We're gonna just take a look at the breakdown. So this is an FHA purchase we did off the home we had listed a couple slides ago for 240,000. So through the FHA process, the minimum down payment is 3.5%. So minimum down payment would be 8,400. Now up front, we're gonna give 2,400 of that. 1% of the sales price is earnest money. Again, that does come off the total at close, but it is given up front. Closing cost roughly estimated at about 9,600. I actually did run the scenario through our system that is roughly about accurate. It
Yeah.
is minus an initial escrow deposit, but when we're looking at purchasing a house, an escrow deposit is going to differ from house to house, from property to property, because it's based on the taxes of the home and then the homeowner's insurance quote you're getting. So that's going to be very different from every property we can talk about. Um, and then we did estimate roughly about $600 for movers. That's
Mhm.
3 hours worth of movers. So that's just assuming that you are going to be very efficient, have your whole home packed up and ready for them to go.
There's still ways to
Again,
save money. Oh yeah.
but yeah, many different ways to save money. But again, it's something that can differ from company to company. It's just an estimate we have out there for you. I will mention though that when we're taking a look at the down payment, it was recently, I've been doing this for 20 years and I'm constantly learning myself. And with the down payment, whether you go with the minimum or you go with a higher down payment, let's say 20%, avoid that mortgage insurance. We want to make sure that the down payment's in your best interest and best scenario for your life. So what you want to always take a look at is the outlook for the house. So is this a starter home that you're going to live in for a couple years, or is this your forever home? Are you taking the down payment out of your retirement funds and you don't want to deplete them because maybe retirement's on the horizon sooner than later? Or are you, getting the down payment as a gift from a family member and they want to give you more money to put down so your mortgages? When we're looking at that down payment, we really want to you want to have a conversation with your officer, your realtor, but also if you ever have a financial advisor in your life, so someone that helps you with your retirement or your day-to-day finances, have a conversation with them because they're really going to be able to say, hey, here's where your strengths are in your savings right now. This is going to be your benefit over 10 years, 20 years. This is going to be the negatives over 10 years, 20 years with doing that kind of down payment structure.
Yes. Uh, so many ways to slice this cookie if you're slicing cookies. It's really, and again, we'll say there's so many different programs and grants and aids and just tools. So really
Yes.
reach out, talk to Chris, see what might be available. Some of it depends on the area, some of it depends on it just can vary on so much stuff, but it's often that 20% is touted because then you can avoid some of those additional costs with a private mortgage insurance. But it really, again, it's just going to depend on the situation. And everyone's moving this the best they can. And so when they've got these different tools, it's just breaking down the numbers and saying, okay, can we save 18,600 over the course of this time? Do I have enough to cover that monthly for what I expect it to be? And just making sure that these numbers work against your current situation. It's what we always come back to ultimately. So let's say this 18,600. Um, so this is now we're building this goal into our budget. So using this same budget that we showed earlier, we aggressively took care of the debts that were out of there. And so what we can see here is this 18,600. If we're doing this over 3 years, let's say we do this each paycheck. So we're splitting this bi-weekly. That means that there's 26 paychecks a year over 3 years, 78 paychecks. Uh, so 18,600 divided by 78, $240 a paycheck. So in this budget, um, we took care of the debts and we just put this home fund in here for 240 from each paycheck. And this is just something we can stick to now. And this just becomes an actionable plan that each paycheck we're moving $240 for the next 3 years. Because at that time we will have that 18,600. We'll actually have 18,700 and something. I rounded up. It was like 238 some cents. And I said we're just gonna make that 240 to make it a little more even. And so this breaks it down into a real actionable plan. It talks about splitting goals with a partner. If you're doing this with a partner, just money is such a conversation as it is, such a communication piece of making sure that you're aligned. And so I think it helps if you have the same buy-in for the process, even if one person is handling it, as it often goes within different partnerships. It's really just making sure people are informed that we're on the same page and that we're building towards these goals as agreed upon between the two of you. We just don't want to be unfair. And that's obviously your situation to figure out, but just something to stay mindful of. Also within this, I just wanted to point out, so we're saving this 18,600 over the course of this 3 years. Um, we still have other savings goals within here that we were building, this emergency, the holiday fund, the vacation fund. So over 3 years, with doing $50 a paycheck, $25 a paycheck, with the emergency savings, we've added an additional 3,900 to emergency savings over the course of the 3 years. For the holiday and vacation fund, we've saved 1,950 in each of those accounts. And I include the medical payment in here. So we're still paying down this debt while we're saving up for a home. And just to show it, $250 a month over 3 years, that would be $9,000. And you could do a whole lot with 9,000 when it comes to decorating a home, right? So this is where I say, really taking care of these debts because this is money you could be putting towards joyful items in your life. We are, just to preface this, we are a little bit over on time. Again, if you need to leave, this is being recorded. It's going to be available on the website. It'll be sent out. We have a few more slides we're going to keep going through on this, but thank you everyone who's here so far, and we'll just keep moving on. So we're not eating too much of that time. With credit, we're doing another education break. Now, I'll preface this as well of next month we are talking about credit made clear. We're going to be talking about credit from a higher standpoint for a general overview of it. But we're going to talk about it real specifically within buying a home because credit plays a huge impact on your rate and in your savings and payments over time for sure. And so trying to get your report and score in the best position possible so you can be in the best rate possible for you. We're going to provide some additional context on this. So when you look at a FICO score, when you look at a credit score, it should say whether it is FICO or if it's Vantage or if it's somebody else entirely. There are a lot of different third parties who are now providing their own scoring methods as well. Traditionally, when it comes to home buying, lenders are pulling FICO 2, 4, and 5. This is here. It says versions used in mortgage lending. This is from FICO's website itself. So just to say, if you are on different apps that monitor your credit, they may be showing you a different version of FICO, so your score may not match up exactly when you're going through this process within this tri-merge pull that's mentioned in there. So lenders can pull from all three bureaus at once, and then they are looking at your full report and your full history, and they're looking at the score from each of those. And then this varies lender to lender, but for example, they might say, okay, out of these three scores, we're looking at the middle score, we're looking at the high score, the low score, whatever that is for them in their process. Understand that it may not be the score that you thought you were using. It may be this other score within this. And so, not focusing too much on the score itself because it may look different. You can absolutely pay to see what your score would look like under these different versions. And maybe that's something to look into as you get closer. One thing I saw said it was about $30 a month from one of the providers, but I would say focus instead on healthy credit habits because that's going to put you in that position later on, and you're going to move yourself towards that positive direction. Chris, you
So
want to jump in on that too?
yeah, let me add on this. So typically, when we're looking at the mortgage process, most of the mortgage products are going to go off your middle score. So we're going to take the tri-bureau poll and whatever the middle score is what we're going to go off of. If it is joint with a spouse or a partner, we're going to go off the middle lower score. So we're going to take whatever partner set is lower, and we will use that middle score. As far as worrying about credit, if you're on those cusps, so if you're on the 650 and you think to yourself, I really want to get up to 670, 680 before I apply. If you're at that 690 and you think you want to get above 700, it's worth applying where you're at. Through corporate America and our investor partners, we do have what I like to call a rapid rescore program where the investor is actually going to take a look at your credit score and your credit report, and they're going to forward us on information on little things you can do. And they're going to boost your score for you. So if you're at that 690 and we want to get you above a 720, it's worth applying and letting us take a look at it for you and say, hey, if you pay this credit card down to by $200, we're going to increase your score by 10 points. If you pay, this card off by $300, we're going to increase your score another 10 points. We're going to get you to that, but we're going to use the credit experts to give you to that score instead of just trying to throw darts at the board and see what sticks.
And Chris, that sort of thing is through that specific partner as well with the rapid rescore.
Correct, yes, but if that's something we're looking for, that's going to be who we're going to be working with.
Right. And I say that just of like, again, this varies person like for what's available, lender to lender, person to person. So really just again looking at your resources. Something else I want to talk about, Chris, you just made me think of this, is that if within talking about financial wellness, a big part of the series is just destigmatizing the shame that can come from past financial mistakes. There are so many people who it's like 70% of 3 out of 4 employees are either millennials or Gen Z. 70% of millennials are on a paycheck to paycheck cycle. There's so many people who don't have this initial emergency savings, who aren't sure where to get started. And that's why we present these is to give people this footing. But it's also to say, like, there's so many people going through this right now, and lenders know this and understand this. And so they're trying to meet people where they're at. And that's why there's also so many programs available. So if your situation isn't perfect, don't think that this disqualifies you because there's so many resources available because they recognize this is the world we're living in and the situations we're trying to meet for finding successful solutions for people. Um, and so within credit, still moving these steps to make it better. We're just strengthening our credit profile. There's specific things we can do within FICO that will improve. And these things stay similar throughout all the different FICO models. But the largest percentage of our FICO score is just making our payments. 35% is our payment history. So making your minimum payments on time, even if it's just the minimum, is super beneficial. If you never miss a payment and you suddenly do, it's a larger impact on your credit score for a negative hit. If you have a lot of missed payments on your credit score and miss another, does not hurt as much, disappears over the course of 7 years, I believe, for negative remarks. And so it's just one of those things. If you are really focusing on what can I do over the course of these next couple of years to improve my credit, making sure all of those minimum payments are on time, communicating with your lenders if something is going on with your different creditors. This is another big one. Pay down revolving debt. So credit card balances being what they are, 30% of our FICO credit score is keeping our balances 30% or less, is how I quote it. You can go the safe route and go 20% or less. And it's just showing the bureaus, hey, I know how to manage revolving debt like credit cards, like lines of credit. Um, Disputing past errors, making sure that your reports are showing accurate. Again, we're going to talk about some of these things next month in our Credit Made Clear. But if you were just looking for some immediate actions to take to see an improvement in your score, really honing in on payment history, amounts owed, and not applying for new credit in this time. Chris, we didn't talk about this before, but I feel like I've also had conversations about the benefit of credit card debt connected to home buying or refinancing. Is there something to this? Am I crazy?
Well, I mean,
For like
credit
consolidation aspects of like when there's so much going on with credit card debt.
when you're looking at all your debt, you just want to try to get your payments as low as possible. We're not, as you're paying things down, we're not looking from your debt ratio aspect of what you're actually paying. We're looking at the minimums. So if you go out there and you take a consolidation loan to handle some of those credit cards, but it's an astronomical payment and it's eating up a lot of your debt ratio, that will actually hurt you in the mortgage buying process more than if you just had the credit cards out there with those low minimums.
And we're saying debt ratio, debt to income.
Debt to income.
Instead of
Yes, yes,
monthly
I'm sorry.
income. Yeah, yeah. No,
Um,
just
uh,
always double checking.
Taking a look too at this, with the disputing areas, you want to make sure that all your disputes are finished when you apply for a mortgage. Any disputes on a credit report when we apply for a mortgage, we'd have to get paperwork completing these disputes from any creditor out there before we'd be able to proceed with the mortgage, so we can see the actual validity on the credit report of what's reporting.
Uh, yes. Yeah, definitely want to get that stuff handled. So much of this paperwork. And we're going to talk about paperwork in one of these steps real fast. But within this now, so we went through, we talked about our goals, we figured out our current financial situation, we started building our savings, we started looking at our credit, saying here's what we're doing over this time to improve our credit. And so next, we are going to automate for long-term success. And so this is just a screenshot from the our online portal just to show how easy this can be to set these things up. Really automating this is, we talked about this motivation, understanding that we use this to fuel our decisions. That said, if you can make this so you don't have to make a decision and it does it for you automatically, even better. Let me tell you one less thing to worry about. Am I right? So this is just a screenshot from our website just to show we can make a transfer. I can say I'm going to pull this from my checking account. I just do this to my emergency savings, which is just one of our specialty shares or name your own account. It's only a $5 minimum balance. And then you can name these for emergency fund, vacation fund, home buying fund, whatever it is. Um, and this was the example from the budget of checking emergency $50, doing this bi-weekly, starting on this date, series ends never. So this is just always going to pull up then under my scheduled. I'll be able to see here's all my future ones. This is set to automatically happen. No longer have to worry about it. It's the same sort of concept, setting up these auto pay for bills, knowing that we've made all of our payments on time. Uh, Really with our long-term success, again, finding consistent budgeting methods. I'm not saying you need to be nose deep in your spreadsheet budget every single day. It's finding a method that's going to work for you. How do you keep up with it, make sure you're staying on the right track, making sure that you're staying mindful of your habits. So that's where you talk about set spending alerts. Within this too, this is what Becky had mentioned in the chat, what we just talked about. We want to get our paperwork together for this as well, even if we know we're a few years out, keeping this record because it's going to come up. These things are going to take place. You're going to need this at some point. It's easier to just get prepared earlier on. So gathering income and tax documents, pay stubs, tax returns, all the different statements. Chris, was there anything you'd want to add for this of what people should look to have together for when they speak with you?
I mean, really, we're looking at for income documents, we're going to be looking at pay stubs, typically the last 30 days. Any tax returns we have to track are the last 2 years of tax returns. Any deposits in your bank accounts the last 60 days. So, as far as like savings goes, if you have cash on hand and you need to rely on that cash for the purchase, you want to get that into a bank account to have that cash seasoned. We can't use cash for a direct purchase. We have to be able to trace where the money is coming from.
Chris, you just said the phrase cash seasoned. That might be a little insider baseball. What's that mean?
Sorry about that. Cash season means that you need to get your cash on hand deposited into your checking or your savings account, and we want it there for at least 60 days. So two statement cycles, so we don't see the deposit. Basically, that means that we're not going to ask where the money came from.
Gotcha. That's what I thought it meant, but I just wanted to clarify that I was testing you to make sure you knew what that meant. No, thank you, Chris. I appreciate it. Something else that I think ties in with this, it says track gift or side income. When we say gift, I don't mean, hey, it came in a pretty bow. This is a legal gift. There's a legal implication to this of people who are giving you money to purchase that go towards these sort of things. Chris, could you mention this as well?
Yeah, so when we're looking at saving money to buy a house, you're allowed to receive a gift to buy the house. The gift does have to come from qualified sources. So qualified sources are basically, I always tell people, someone directly related to you. So a sibling, a parent, a grandparent, an aunt, an uncle, or a fiance. Also, depending on the program, I believe that we can also use gifts if someone will be dwell or residing in the home. So if you have a life partner, a life roommate, things like that. If they're going to be residing in the home, we can use the gift source from them too. Basically, it just means that, hey, mom and dad want to see me be successful. They're going to give me $10,000 towards the down payment of my house. They're allowed to do that. You're allowed to receive it. We just have to know that it's coming from them, and we actually have them sign a form stating that they're giving it to you and they're not lending it to you. There's a difference between a gift and a personal loan. We're not allowed to use personal loans for down payments, things like that. It has to be considered a complete gift where um, there's no repayment terms to whoever you're getting the funds from.
Yes, thank you. I want to make sure we start talking about that stuff right. And also just, getting organized for future, you're just getting those questions ready, just like you've had in the chat. Just what there's so much information out there. This can be such a confusing process with some of the ins and outs. We're trying to make this a little simpler. And so write down any questions you have about any of this stuff. You don't know until you know. I'm a big believer in no stupid questions. So really gather these things, and that way Chris is gonna answer best he can. I'm gonna answer best I can, and I'm gonna go to Chris if I don't know the answers. So uh we're gonna keep moving. I feel like Chris is answering a question in the chat.
Yeah.
But step 10 and really is trust the process. Revisit your goals. Things are gonna change over the course of 3 years. Situations change. Just make those adjustments. Be flexible. Um, Recognize as debts are being paid off, as you're reaching different thresholds of savings goals. Celebrate these wins. Like you're doing a lot of things. And really, the whole point is that you have this plan in action. These automations are set up. You're building your different savings for your down payment, your reserve funds, your just initial goals, your life outside of this, that you are taking care of your credit, you're moving these things. You can go grocery shopping without worrying if this is going to derail the entire process because you know that you've built a solid process. So, that was step 10. Bonus step, start the conversation. Again, we keep talking about it. Really, this is a conversation. It doesn't need to be anything crazy. It's just asking these questions, trying to understand what your situation might look like or what this process might look like for you, for what your goals are as an individual. Everyone is so different. We can't say it enough. Of everyone's situation is so unique. And so really, I would say, like, even if you are 3 years away, start the conversation with Chris. Chris, anything else you'd want to add for
Uh,
your plug right
no,
here?
I mean that's it. No matter how far you are away, questions are important. The more questions you ask, the better this experience is going to be for you. This is one of the largest transactions you're ever going to do. As a consumer, we're going to go to the grocery store. We're going to pull the box of cereal off the shelf and we're going to read every ingredient on there and we're going to read the label of calories and the fat content and everything like that. But when we get our mortgage documents, we just flip through and sign everything without actually reading it. Read what's being provided to you, ask the detailed questions, ask the general questions. Again, it's treat it like any small transaction we're doing. It just takes a little more time and it's going to make your experience through this process a lot better.
Uh, yes. And I think that's the big thing is like this is your experience, your process. You want to make sure this is happening on your terms. And so, again, being active with these questions is a great way. And then Chris just shared this direct line. Chris, I need a direct line on how to get that suit because that's a good looking suit.
Thank
No,
you.
so if you're not a member of the credit union, we do have a new member discount if you decide to join and start building up some of these savings. We also offer 0.25% off of vehicle loans, signature loans, fixed rate home equity loans. So if you were looking to start membership, it's a $5 minimum balance on our savings account, and that's it. There's no monthly fee, there's no sign-on fee, no annual fee, checking account, there's no minimum balance. I could talk for days about how simple and great our products are and how easy they are to apply to your everyday life. And I can and I will if you would like me to, but you can also email me questions about that at financialwellness@cafq.org. Just to say, we do have a discount available. If you work for one of our partner companies, you may have something available to you as well. I would talk to your HR person or reach out to Becky for questions about additional discounts. We also just started a promotion with share certificates where if you bring $500 of new money in, we are offering 4.25% for interest over a 7-month period for that growth. So definitely can be a great option for building some of these savings as we go at a higher interest rate that's locked in for that period. And then again, I'll mention Becky Hilton offers Money Compass as well as her coworker Pat. If you are trying to have a conversation, maybe not about home buying, but just about general personal finances, although Chris could absolutely help with that as well. This is where we have Becky and Pat available. This is Money Compass. You can go there, cafq.org/coaching, financial coaching, Money Compass, so many ways, but free, unlimited, secure, your time to talk finances. I cannot speak about these enough. I've had couples attend these for partners. I've built budgets with people in these sessions. I've compared us to other banks, whatever it may be that people are looking for. This is just a great time, I think. So I would encourage anybody who wants to just have a conversation about finances or about the credit union. Check out one of those Money Compass sessions with Becky. She also has her contact details in the chat there. As I said, next month we're going to be talking about credit made clear. We're going to talk more about all these things we started referencing. It's going to be a great session. This is going to be on a Wednesday though, because we're not going to be here on Thursday. So Wednesday, June 18th at 12 instead of Thursday. And there's a link to also register in the resources tab if you're wanting to do this as I move past this slide. And so now we're into the Q&A. Thank you, everybody. I know that this has gone longer. We had so much great information to share. I feel so good about everything that we shared with you all. So, and I know you guys have done a great job of putting questions in the chat. We've tried to answer them as we go along. If there are any final questions, feel free. Now's the time. I would just say again, thank you so much. Thank you, Chris, for being here. Thank you, Becky, for helping managing the chat. Thank you to all of you for attending, whether you're from our partner company, our communities, our memberships, or if you're just interested in finances. I cannot call on people. I can't unmute for calling on people because I see someone raise their hand. Um,
Someone does keep asking. So if you can't put the 20% down, PMI is going to be determined by your credit, your debt ratio, the loan to value on the property. So do you put 3.5% down? Do you put 5% down? Do you put 10% down? Those are all going to be the key factors. It's all a larger formula than just saying it's the loan to value or it's where your credit falls in. It's kind of a individual big picture for everyone to determine that percentage aspect.
yes. Chris, do you have other final statements, closing statements as we look for any final questions?
Yeah, there's a lot of questions in there. What if I need it sooner? Give me a call. Let's have a conversation. There are ways where we can help structure things with down payment assistance programs. where I can talk to you more about maybe using retirement funds or even working with your realtors on, saying, hey, we have this much, we're short this much. Let's get a closing cost credit. Let's get a down payment assistance credit. There's a lot of things we can do out there to structure different types of sales to benefit you as the member, as the buyer. So it's worth a conversation. That doesn't have to be a 3-year outlook, a 2-year outlook, a 6-month outlook. You could want to move next month and we can still assist you with it. We can, do closings as, little as 20 days. I've done them before, on a new contract. So it's really, we have a big variety of products we can offer. We do kind of have something that fits everybody. And as our days roll, we get new products daily through our partner companies.
Uh, yeah, there's just a lot of options. So
Yeah.
just definitely, whenever that time comes, or if you're just like wanting to have that conversation, definitely reach out to Chris. Or just anybody from within our real estate department. One of the links we actually included, let me reference this, in our resources, you'll also see a link to our homeowner education center. And so on our website, we do have a lot of resources available as well for PDFs that you can read through. So I don't see any other questions coming in. I think we are good to go ahead and call this. Thank you everybody for attending, for sticking around. As we mentioned, there's a survey. Let us know what really spoke to you, what else you'd be interested in learning about. Check out registrations for our future sessions. Again, we showed a way to do this today. This was one scenario of a single person trying to save to buy a home in 3 years. The big thing is really just breaking it down into an actionable plan that works within your situation and setting up that automation just so you are moving towards that goal with uh just efficiency and less discipline required, I think is in a very positive way of saying that. So it's just, money is an emotional math problem, and we're going to get there. And it's through these sessions like this of just breaking it down. So thank you, everyone. Thank you for the kind comments in the chat. And we're going to go ahead and call it. I hope you all have a great rest of your week. And hopefully we see you next month on that Wednesday for Credit Made Clear. All right. Bye, everybody.
Thank you, everybody.